Afternoon. Ira Epstein with your metals market wrap-up for this Tuesday afternoon, the 12th of May, 2020, and about 5:20 p.m. Central Time. So I'm back. Had my other eye done. I can actually read the boards and see what I'm doing, which for me is phenomenal. They say it'll get better over the whole week. I have to go back in for another exam next week. And I had to take the COVID-19 test. That's the Illinois law. Within 72 hours of whatever surgery you're going to have, negative. So I'm quite happy with that too. But in the marketplace, we're already open for the evening trade, and we're getting follow through to the downside, as you can see in the stock indices. Gold up a little bit. Silver ran into a buzzsaw against its upper Bollinger Band. We'll see that in a few minutes here. Most of the currencies down a fraction right now. Not sure what that all means. Bonds and notes stable. Energy markets down as we're getting the API numbers and getting the EIA numbers. And of course, you're still getting the builds, and the market is very concerned with that. So let's take a look at a weekly chart, and this is what it is of just closing prices. And you're at 1707.70, so you're roughly $30 from the high that this market closed at in a number of years. That's not that terrible, and as you can see, you're just drifting. Now, if you should break down much, the problem is you could drop $100 for the next support back to 1626. Conversely, what's the action? We have just been consolidating. You can almost draw a chart line connecting these points and coming up from these points. You're forming a triangle pattern. And from that pattern, we'll see which way the market wants to break out. So it's working towards an apex of prices. When you get there, it eventually breaks out one way or the other. In the meantime, what we do have is an uptrend. The market's got higher lows. It's got higher highs. That's the definition of an uptrend. Take out 1692.10, and you could break down and have lower highs, lower lows, back into the downtrend. Where's the battle forming? Well, take a look at the 18-day average. So often I tell you that is the line in the sand, and from that number, the market decides what it wants to do. And I still say that is exactly what's going on. When that occurs, it's not uncommon for Bollinger Bands to run into the market and start getting very close to it. And you'll see these markets are suddenly narrowing in. Look at how wide they were here. They're not super narrow yet, but they're narrowing in. Should the market drop and get under 1692.10, the Bollinger Band 1681.20 is the next support zone. Should the market be able to clear this hurdle up here, next hurdle, 1745.20. Momentum isn't helping us at all. It's just drifting sideways, not giving a clue as to what the next part's going to be. So going home, this is how I'd read the market. The swing line's bullish, but because you refuse to close over the 18-day average, the bias is down and momentum is flat. In the gold-silver ratio, something favorable for gold is that silver has been gaining on gold. That began back here, as you can see. I can just take you there, how it started. This was last Wednesday. This was Thursday, Friday. So now you've got a move where you're at least staying under those numbers, and you can see that the market has done so. Yes, it's back into this supportive area, but if this gives ground, let's assume that you get under the 107 area, well, you got a long way to go if this market wants to start a big correction. So far, that 125 looks like a historic high that may not be re-challenged. When I look at the silver chart, what the market has really done is worked itself into a pipe. Look at how narrow. This is what you call narrow Bollinger Bands. This is also an overbought condition. Now, what's the one thing I teach you? When the market is coming up, the first challenge of a Bollinger Band is where I think the professional comes out of the market. On this run, you got as high as 1598. The upper Bollinger Band's 1595.50. Since then, you haven't given up anything by coming out of there. If the market's going to break out, we'll see it. It's got to at least settle two consecutive days in a row over the upper Bollinger Band. Then 1655 becomes the next target. Hasn't done that at all. In the copper market, you try to break out of that pipe again. This is the pipe. last week here, and as you can see, the market had a day over it. I needed another day to get that 2 in a row. It refused to do it. So again, in that pipe, you get false moves all the time. That's why I teach. You take money off at that Bollinger Band. You can always get back into a market, but when it gets away from you, you can't get out of it again because those prices aren't being offered. And that is the problem that traders have. No setup here that I see that makes sense in the copper. In the platinum market, same thing. Look at the narrowness of the Bollinger Bands. The market tried a down move, then came back up for a higher high. How many times have we been hitting this 18-day average and not going anywhere? You're stuck in that sideways action. Let the market resolve. I'd rather chase markets like that than predict markets like that. You're oversold in the palladium. The market's trying to stay under the 18-day average of closes. I think that's clearly evident. First times you're hitting Bollinger Bands, you're getting bounces away from it. And even if you had a sell signal, would you take an oversold one? I doubt it. In the dollar index, the same game. By the way, if you get my morning subscriber video, I pointed out today how many of these were all over the markets. And I said, from these are going to set up the new trends, whatever they are. But a couple of things happen. When you get super volatile, the way we did when the virus hit, markets explode and the Bollinger Bands widen out. They then come in as the market gets into whatever that new environment is, and from here, sets up the new trend. And this is chart after chart. I went through it with everybody and I tried to teach them something about that. You're in your uptrend here in the dollar index. You'd have to take out 99.46 for it to fail, but you haven't hit a Bollinger Band. This did not hit it. You haven't hit it other than this downside right at the beginning of May, and that would have been the only time to come out of it, and since then, you just don't have anything to work with. I'd be very cautious about doing anything there. You know, a tool that I use a lot, I had a coffee trade recently, and I was explaining to traders where the numbers were coming up in it. And it came up actually out of pivot points along with my other work. So in other words, the pivot point, let's assume you're bullish on these charts. You're looking within pivot points as possible other entry spots where maybe these other numbers are too far away, or you're through them but you're still bullish. Maybe these numbers will offer it, because what a pivot point does is it sets up the pivot, a mean. And then from there, you get resistance points. I use 2 resistance above the market, 2 supports below. I've seen pivots go out in some currency trades for 4 and 5. It depends what you're trying to do, but I'm giving you the common way of doing it. I've put together a video series that teaches what these are, how they show up, and then I tie my stochastic trade into it. Because I think you need a momentum index when you're using pivots to get an idea where it might be turning for you. It's another tool part of it. So I teach you first in one video how it works. I use a lot of PowerPoints in them. Then I teach you how to work with it. Then I teach you how to plot it on your charts. And those other ones are using the actual charts and going through it. Just go to our website. Under our free offerings, you can click on that, sign up. You'll get it from there. In my morning video, I often teach things like this, and I'll take you to them and show you where I'm coming up with ideas, because I do use this indicator as well. I'm Ira. You have a great day, and I'll see you all tomorrow.